Good morning, Warriors. Big day today with Ronnie being here at the top of the next hour. If you guys checked in, there'll be an hour of analysis before Blake interviews Ronnie. I hope everyone had a decent week. The way I see the week, it was basically one day, all excitement, supplied by Fed Chairman Powell. And the question is in everything from gold, this was gold, limited follow through. Same thing with, I'd say, the euro. Higher on the week, nice reversal, but not exactly closing at the high of the weeks, except we're not closed yet, but you have an up week right here. I know all my fibs are in the way. Similar for the Dixie. Here's the Dixie weekly, about unchanged. So we really didn't have major reversals because there's a lack of follow through. Everyone waiting on the G20 this weekend to see what happens here. Indexes included. I believe they have the most powerful week. When you look at a weekly here, there you go. The indexes really had the most positive week, and they're in a 2-day give back period now after yesterday. I still don't believe we're just going to get a failure from here. So maybe something, they surprise the market to the good side. Trump needs a win right here with everything that's happening domestically. You think about President Xi and all the other global leaders seeing, that President Trump has some trouble at home. Andre's not cooking. Hiya, Paul. How are you? With this going on, you're wondering whether or not world leaders like Xi want to give him a break when he's under pressure. So they will if it's good for them too. So everyone's waiting on the weekend, and we'll see next week if what happened this week is real. So far, I'm leaning with that it is. And next week, I'd be looking for sales in the dollar, maybe up around 97.10 or so. Caught this, and we'll see what happens. It could just be a little bit of a flagging formation developing here. But, you can't rule out for this whole thing to unwind and blow off into the end of the year, too. So next week is a pivotal week to confirm whether or not what Powell gave us was a sugar high. So I have a little sugar high today. Looking forward to hearing Ronnie Scheffler. Never heard him before. I never even really knew about the $1 billion day until Blake recommended the video. So stay tuned for that. I don't do a lot on Fridays as far as establishing new positions unless we have an NFP, for example, where you have some volatility to trade your areas and execute around your areas. So, pretty much taking home some long gold positions and ETFs into the weekend, and we'll see if that works out next week. And that's about all I have this week. So we really had one major day out of 5, and we'll see next week if the markets can follow through and confirm that they believe Powell is going to lighten up a little bit with its pathway of tightening. So, Blake, I know you're probably getting prepped to talk to Ronnie in a little bit, and you have the whole Twitterverse buzzing about it. So a lot of people looking forward to it.
There are. Can you hear me?
Yeah.
So I'm gonna. You guys that are, they always say the early bird gets the worm, right? The early bird gets the worm. So I'm going to give you guys a little bit of insight how Ronnie and I met, and you're going to laugh about it too. I'm going to, and this is not something that I'll cover when he's on. He might be listening in right now, but he'll laugh about it too because it's funny. So if you guys want to know how we met. It was, I hosted the Morning Edge webinar for 15 years or 14 years, right? So for about a year and a half or 2 years, Ronnie had been listening into my webinar. He's just listening in every morning. I had no idea he was listening in. And then he reached out to me one day. He sent me an email. And people, you have to realize, I've been doing this for so long, and I've been doing these webinars for so long. And here I am. I work for Ally or Wise Trade or MB Trading, whoever you want to say I work for it, because it been acquired so many different times. I made a salary. And then I made money trading. I didn't get paid. I didn't get a Goldman Sachs salary. Let's put it that way. But it was paid the bills. And for me, my trading was I traded as an independent trader, so I didn't have a huge account. But the money I made allowed me to live a pretty good lifestyle. So I would but basically, it's like I had 2 jobs. I worked as chief currency strategist for the Wise Trade Group, and then I was trading, and I make money. So I've fun trips and cars and all the fun stuff. Just trading, but trading like as a mortal, right? And so I'd get emails from people all the time, just probing me for this and that, and want to do this business deal and that business deal and blah 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 blah. And so I got an email from Ronnie, after he'd been listening in for a couple of years, and he's like, hey, I've been listening in, and I think you're great. Or if you're ever interested in taking your trading to the next level, give me a call, or connect with me, shoot me an email back. And I ignored it. I ignored him. And then he emailed me like maybe 6 months later, and he's like, hey, I never heard back from you. I'm still listening in every day. I think you're great, and I got my office listening in to you as well, and they really think that you're a sharp guy. Why don't you email me? And I ignored him again. I'm like, who is this Ronnie guy? And then he emailed me one more time. He goes, really, if you want to step up your trading, you should contact me. You might recognize my name from a documentary that we did years back called The $1 Billion Day. And I was like, oh my God, that's where. And I always thought I heard his name somewhere, but I don't. It's like I never really thought twice about it. And so when I Googled his name, I'm like, holy cow. Oh, that's that Ronnie Schlepper. I better, contact him. So anyway, then the rest is history. So
that's a great story. So funny. when a good thing is going to happen to you, you can't even sabotage it. It's going to happen. How about that, buddy?
It was so ridiculous. I look back and go, oh my God, it's ridiculous. But anyway, look, and this is, before the interview, and I know so many more people are going to be here. We got our normal listeners in right now. So that's why I'm kind of giving you guys this information. And I want to cover the markets too here. But I want to tell you guys, and I don't know if he's listening in, and I'm not even going to look at this moment. He's an amazing individual, and I know I've mentioned that before, but I want you guys to be able to experience some of the stories that he has, because he's seen so much. He started trading in the early 70s, and he has been around the globe, rubbed shoulders and traded with some of the best, the people you read books about. And, he flies way under the radar. And I've had the opportunity of knowing him for the last few years. And I get to talk to him, pretty regularly, obviously, because I trade for the firm. And I want you guys to be able to experience some of his knowledge, because he's got so much to give. And he doesn't, it's not, and he's not a social media guy. And he's very humble. And just an amazing individual. So I hope you guys really enjoy today's meeting or today's interview, and we're gonna have fun. Yes.
Sorry, if I may add one thing.
Yeah.
When I first started my first job in London, this was like 16 years ago, in one of the big banks in London, my boss on the first day, he said, "Oh, welcome. You have to do these 3 things. First, read Market Wizards by Schwager. Second, watch the BBC documentary on $1 Billion Day. And third, watch the BBC documentary on Nick Leeson." Those were the 3 things he said to me. You have to do first, and then we start talking.
Yeah, I mean, but it's true, you know, like that's like the staple. If you're an FX trader, it's like if you haven't seen the $1 Billion Day, you should probably take the next 30 minutes and skip the Canadian data and go watch it before Ronnie comes on. I mean, it's one of those everybody knows about it. You know, it's you know that if you trade, and it's kind of it is about as if you take some of the thoughts of what they're doing in the markets back then without charts and without, you know, Bloomberg terminals, but you think about what they're doing. It's the same thing as going back and reading the Market Wizards, the original Jack Schwager Market Wizards book, which I know Dale's interviewed. Jack, you've interviewed Jack, right, Dale?
Yeah, a few times.
A few times, yeah. And by the way, that was the very first book that I ever read in 1996 about trading, and I 96, because I started in 94, but as a broker, it didn't, you know, that's completely different.
Yeah,
but
we
as
had
a
charts
trader
back then, Blake. Only they were updated by hand, and there was only one. There was only one company that had like intraday type charts. It was called VidCom, and there would be one when I was in Chicago. There would be one in an office for, you know, all the floor traders would come up to use it, but it was called VidCom, where you could actually see what's happening intraday. Otherwise, people just did point and figure on the floor by hand. Everything was by hand.
It was, and even when I started trading, I mean, I had to. It would take me probably about. I used Telechart 2000 back in '96, and it would take me maybe 2 hours to download all of my charts to print, and then I would print them, and then I would spend another hour and a half using a protractor to do all my fibs and trend lines, and then I would take my pile of paperwork into the trading floor in 96, 97. So I had those charts in front of me, all my homework in front of me. I mean, but that was the way we did things. But before then, you know, yeah, it was very limited. And Ronnie will tell you his whole experience with how the evolution has happened over the years. And I think you guys are going to really enjoy it. So, you know what I should do though, and I hope you guys enjoyed that little story. I'm going to take a look at the markets really quick ahead of we have Canadian data coming out, but let's talk a little bit about the markets right now. So the euro, you know, still we have this big inverted head and shoulder pattern that's developing. It's complex. You know, I actually had a bid, and matter of fact, let me make sure my bid is canceled. My bid is canceled. I had a bid for the euro dollar at 55 overnight, and you notice the overnight low was 57. So it missed my bid because I was just hoping to play this range, because what I was thinking last night was going to be this, you know, here we are, and which may still happen, and then, you know, back up like that ahead of the weekend. I may still buy the euro as we dip down there, as we're coming towards the lows. If we get down towards the 50 level, I might, you know, clip off a little piece, but I doubt I'm going to be in anything over the weekend. It just, from a risk reward perspective, you know, and I tweeted this last night, and I'm going to show you guys. And by the way, if Joe Perry, who was on, you know, it was on Real Vision TV, and Joe's our, you know, institutional sales guy. He was on Real Vision TV this week, and he was like, you know, the S&P set up for a great short at 2750. You know, that's Raoul Paul's network, if you guys aren't aware, and he nailed it. I mean, we went within a couple points. We just overshot the 2750 perfectly and reversed. Now, the reason why I'm pointing out this chart though is because this is what I tweeted last night. I mean, we are obviously at a inflection point in the market, and what's going to happen going into the end of the year is all going to be driven by this weekend, in my opinion. So it doesn't, you can go ahead and take a position ahead of the weekend and hope for the best, but it's really like, in my opinion, it would be more like rolling the dice, because you're going to get a breakout above the 200-day moving average, the trend line, the 618 retracement, which also probably coincides with 38% retracement. I would assume it does. So you got a 38% retracement. You've got the, here, let me grab another fib. Oops, here. Why? Oh, here. Oh my God. I feel a little dyslexic this morning, maybe because I've got this interview coming up and just thinking about everything. So, we have the 618 and 38% retracement all coming in at the same spot. We have the 200-day moving average just slightly above at 2750. We have a trend line that comes down. It's obviously an inflection point, this whole area. So, what happens, here is we're going to break out aggressively going into the end of the year, and China, U.S. trade tensions ease, and it's interesting. I just sent over a piece from Goldman to our chat room just moments ago, and they're like, it's a 50% chance. The market shows you it's a 50% chance. It is really a 50% chance, whether we're going to break higher or break lower. But I'll tell you what, if we have a if we have a complete breakdown in trade talks with China and the U.S., and we enter a severe or more severe Cold War, the equity markets are going to be punished, probably going into the Christmas holiday. And if you were expecting a Santa Claus rally, it may not come. And look, I'm a seasonal guy. Certain things, especially like Christmas rallies and summer grinds higher, and sell in May, go away. You get a sell off in May, and then the markets start grinding up in July, August. That type of thing. I'm a believer in that, but not to a point where I just blindly start doing things, and I just keep it in mind. And yes, I have in mind that we have a Santa Claus rally. Tis the season. More times than not, we get a rally in December, but it's not coming this year. If trade talks break down, it's pretty clear by what we're seeing here, and because of the state of the equity markets and the tensions and the world leaders that we're dealing with, that we will have an S&P break lower. Now, and I'm not willing to step in front of it this weekend and roll the dice, because that's what I think it is. It's a dice roll. Now, I'm talking about equities, obviously, because it really will influence everything that we do about equity or currencies too. You look at the dollar yen, it's extremely resilient, but if trade talks break down and the equity markets start selling off, we're going to go right through here. The flip side is, if things work out great, and it looks like we're past the worst, the dollar yen's going up here. So again, I don't want to stand in front of the markets knowing that it's really dicey right here. Euro yen, Euro yen's up against a pretty big resistance. You can see it as well. We got some, you can probably bring this all the way down and say, oh well, we got a lot of support coming through here as well. So again, tightness of the range. We know that a breakout is looming, and whatever happens over the weekend and whatever happens on Sunday, we're probably going to get a couple of day follow through. in either direction. So, you know, if it is a breakout in the S&P in risk, just in general, we'll probably break out, pull back, you know, continue, you know, do something like that. And then if we break down, it's probably going to do like this. It's going to go down, bounce, and then, you know, eventually like that. Again, I think there's going to be plenty of opportunities in the next 2 weeks, especially with the Brexit vote coming up here on December 11th. But, you know, am I willing to step in front of this train? I mean, you know, and I've got a small Aussie New Zealand long, and frankly, you know, if things go south in with the China, you know, U.S. talks, the Aussie New Zealand may actually crack through this big long-term support, and I'll get stopped out. So, and I don't even know if I want to take on that risk over the weekend. Frankly, I may just take it off and reestablish it on Sunday if there is a positive result. So there's a lot riding on this weekend, and that's the point I'm trying to make. Now let's talk a little bit about today. You know, here's the dollar Canadian. Now, you know, if you look at ForexAnalytix and you read like the analysis from last night, just a basic technical analysis, because everybody that uses ForexAnalytix will have at least this analysis. That we're setting up a potential double top. Okay, you know, you can see the possibilities, but as long as we remain over 132.50, it's bullish. Now, in the event, okay, then this is a setup that I'm thinking about going into next week. If we have decent data out of Canada today, at least not a train wreck worth of data, you know, I think it's GDP numbers, and then we have some GDP numbers and inflation data, RMPI, the raw materials price index, and blah blah blah. But if we have strong Canadian data, or at least not horrible Canadian data, and then things between Trump and Z go okay, this dollar Canadian has a long-term double top setting up, and especially with crude down at $50. I mean, crude could bounce pretty easily back up to 55 or 60, and that would probably put the dollar Canadian, you know, down here back towards 130 or back towards the 200-day moving average. So this is a setup for next week. Now you might be able to get a little trade-off today if the data is good, but I would expect this trend line to hold, or, you know, the support, you can put it right here, the support through here at 132.40, 132.50, it should hold. But, you know, that's kind of what I'm looking at with the dollar CAD going into today. And you know, obviously, because we have that Canadian data. Let's take a look at some of these other majors. So you got the cable that's got a bearish wedge. You know, things are not looking good for the Brexit vote, and if the vote fails in Parliament, May was saying she wants to hold a second referendum. I mean, you know, the pound, unless that vote passes Parliament, it looks like the cable's going lower. And I mean, the market is extremely bearish, and for some reason, if things, you know, if it does pass next, you know, in a week and a half or a week and a couple of days, I mean, the pound will squeeze. I mean, we'll be trading back at 140 pretty quickly. But as it stands right now, I sure as hell wouldn't want to be long. Not right now, and because it doesn't, you know, until we start seeing some signs of support for the Brexit deal as it stands, looks pretty dicey, and I'm leaving it alone, as you guys all know. The Aussie has pushed up some pretty good resistance here, and you know, with the Aussie, the only way it's breaking higher is if things go well this weekend. That's it. And if things don't, we're going to be right back down at trend lows in the Aussie. Kiwi, 200-day. Here, let me grab this. I'll just move that over here. Trend resistance. I mean, you know, you can see why the Kiwi is capped here. Again, this all lies and lays on the shoulders of this weekend. A positive meeting and a good G20, you know, hawkish, if you will. Kiwi breaks out. If not, it's going to be an epic failure here. Is it worth rolling the dice? No, I think there's going to be plenty to trade, come Sunday night, Monday morning. There's going to be plenty to do. No need to put yourself in harm's way at this stage. Swissy, we're still held by the 38% retracement despite this bear flag pattern. This 38% retracement is really holding us hostage right now. We talked about the Canadian, and by the way, the USMCA or the new NAFTA deal has been signed. So, maybe that's a green light to buy pesos. But then you also got to keep in mind AMLO steps in tomorrow, I think. So, do you really want to be long the Mexican peso with AMLO coming to power in Mexico? It's a tricky game, but we are coming out of this ascending wedge. But I think more of this like downside here is going to be risk appetite. Stocks are strong. S&P bounces. U.S. dollar, Mexican peso. The peso strengthens.
Blake, I know you were at Pendleton, and the Marines are pissed that they can't get into Tijuana for the weekend because the border's closed at San Isidro.
Oh, really?
Oh yeah, the border's closed. You can't get, if you were over there having fun, you can't get back, and if you want to go, you can't go. So, and I know how much you Marines.
Wait. So you're saying that Marines can't even get, U.S. military service member can't even get back over the border?
Yeah, the border's closed.
Wow, that's closed. Crazy. And I can't tell you just from
you were there once or twice, weren't you?
Oh my God, yeah. I was there when I was 14, for crying out loud. I shouldn't have been in there when I was 14 without my parents, but I was. So, but that's a different story. Anyway, which is scary. And if I think about my 14-year-old now, but the thing is the thing is, I'm surprised that because I know that a lot of service members, they go over there and they have Mexican honeys that they're shacked up with. Anyway, hey, I'm gonna pass it over to you guys. I got a bolt for the data, but I'm gonna be back. I'll see you guys in a half an hour for this wonderful interview with Ronnie Schlapfer. So I'm gonna pass it over to Steve and Stelios and you, Coach.
Okay, buddy.
Thanks, guys. And good morning, Steve.
Good morning, mate.
Morning, Stelios. All right, got to roll.
Okay. Bye-bye, mate.
Hello, Steve.
Hey, Coach.
How are you?
Good. How have you been?
Good. TGIF, and what a way to wrap up the week, huh?
Indeed. With a great interview. I know that a lot of people have been eagerly waiting for it. So Blake is going to be back with us for this time. He's going to be the host, and I'm pretty sure that you're going to hang around, as all of us, to listen in. What do you have for us? Anything that has caught your attention?
No, I mean, I don't know how you look at it, Steve, but it was kind of like one day of great action, maybe an hour or two after Powell, and the rest of it has been kind of comatose action. And now the market's trying to determine whether or not that was just a one-day wonder and across the board. So I guess we're going to have to wait till next week.
Personally, I think that we would have seen follow-through, but it's exactly what Blake said. It's in expectation of what's going to happen over the weekend. Yeah, exactly. Yeah. So I think that we would have seen a lot of fireworks if we didn't have the G20 coming up after the obvious capitulation from the Fed. I'm not going to say necessarily that it was a politically induced capitulation, because we've seen weakening data coming up from the US, and not only. So, it might have been a combination of political pressure and some, obvious evidence that things are not so rosy. One way or another, though, the Fed is showing that the path forward is not as hawkish as initially expected. As we were saying yesterday, for those that weren't here, now what's being priced in the market is roughly one more rate hike. Yes, Elio?
Sorry to interrupt. We had the Canadian GDP worse than expected.
Yeah, I can see USD CAD already pushing higher from this 133 zone. We actually spent the last couple of days stuck here, and I'm wondering if we're actually going to see much follow through. What were the exact numbers, Stelio?
On a month-to-month basis, month-on-month basis, it was expected 0.1%, came in at -0.1. That's
Okay.
and we also had annualized. Actually, I don't have that number.
Industrial production prices, though, higher, 0.2 positive, yeah, versus -0.5 expected. So
and raw material price index also came in negative, but less negative than expected. So
yeah, so two of the data points in essence could in essence nullify the effect from the lower GDP, in the sense that inflationary pressures do play a role in the monetary policy of the central bank. Anyhow, it doesn't seem like the USD CAD really wants to take off from here, and I think that it will follow the example of everything else, as we were saying. Powell obviously clearly said that the neutral rate is lower than we initially expected that the Fed is going to acknowledge that it is, since he mentioned explicitly that we're getting very close to that. So I don't even think we're going to see 3% rates before this business cycle is over. So we're going to find out. But still, what is the market now pricing in? It's pricing, I think, more or less a dovish hike, obviously, for December, and then one more hike for 2019, and then we're pricing in a rate cut in 2020. Is this the case still?
Let me check. I usually look at Fed fund futures, and going 2 years forward, they're very liquid. So actually, yeah, there is no price for. There's very little prices. Actually, it's flat in 2020. So yes, we're pricing one in December. Then let me go and see. That's 97, 60. So yeah, one more, and actually maybe a tiny bit more. One and a bit, roughly 30 basis points for 19, and then flat as far as I can see in 2020.
Yeah, so obviously the market is not so optimistic looking forward as well.
Yeah.
So when does QE start again? Still, do you have that on the calendar?
Not yet.
Okay.
If I knew that, if I knew that, I'd be on the $1 billion day video.
2100 S&P, and you'll know it. So
yeah,
right.
Good point.
All right. Hey, Steve, I was thinking, you're talking about how we have to wait. Now we're waiting for the G20. The day before, we're waiting for Powell to say something. Trading is a great training ground for learning patience and learning how to wait, and can make everyone a better husband, in my opinion. learning how to wait. What do you think?
I can't disagree with that.
Do you have to ever wait, guys? When you're ready to leave, do you usually have to wait?
My wife actually. My wife actually, since the market is very slow, my wife actually used to be very bad with timing. No, very bad with timing. So when we were initially a couple, after like a month that I was waiting, because she was still living with her parents. I mean, I'm with my wife since she was 22 years old, and I was 24. So, after like the first 2-3 times that I had to wait under her house, I was like, listen, honey, everything is great, etc. But I really consider it amazingly disrespectful for, to have somebody waiting. So next time I'll have to wait. I'm just going to leave, and you're going to have to, take a cab and come find me.
Oh my God,
and actually the next time I waited 5 minutes, and I actually left. And
wow,
that was it. And that was it. She learned the lesson.
Oh boy. Yeah, not many men are brave enough to try that. Anyway, Steve, you're good for you.
it's really an advice, and then I'm going to go directly to the markets that I would give to everybody.
Right.
I think that each one in a couple has to set the rules for the their own rules at the very beginning, so you have a great relationship afterwards. Because if you lay down the rules at the beginning, and both parties agree that okay, I can accept that ABC is important for you, ABC is important for me, and that the other person's flaws are not so important to you, then you can move forward and not have future issues. And I'm happy to say that I've already spent like 14 years with my wife, and we never really had any big fights or disagreements or whatever. We've had a
smart.
Pretty,
you had a smart mom and dad that taught you to do that.
Obviously, parenting plays a role. Yes.
Yeah. All right. Well, and maybe in my next lifetime, I'll give that a shot. All right. Anyway,
Joe is writing this show is turning into the love connection.
Yeah, it is. It's the dating game. All right.
Yeah. But in all honesty, I mean, I have very few markets to show that actually display something worthwhile. First of all, it's not by accident. Blake already showed that we are in confluence of resistances here in the S&P. I actually bought yesterday at 27.32, and I made like a fast 0.58% profit to the upside. But obviously, I bailed out with it because I don't want to have any exposure, over the weekend. And as you see, the Nasdaq more or less displays the same kind of picture. I mean, we have this descending trend line. I do not expect that the market is going to try to push through it, ahead of the G20. So as Blake said, I mean, we are, everything you look at in the market, we are at quite critical junctures. And I think that next week there is a very, very high chance that we're going to have, a lot of volatility and a lot of movements. And I think it might end up being a great trading week. The DAX also stuck here in what is a textbook so far descending triangle. So I know that Gregor is looking for higher, and that might actually happen. But for me, the key level to see break to the upside, to start thinking that okay, with this might end up being like a double bottom, is going to be this confluence of the horizontal support resistance area and the descending trend line. And even if we break above that, I would want to see the neckline of this head and shoulders formation break higher. Then I can start counting this as a double bottom formation, and then we can start talking about this being, instead of a big head and shoulders formation, being more like an ABC, like a zigzag, like a big corrective move lower, and looking for much higher prices. But I think jumping the gun doesn't really matter, because if we end up invalidating this head and shoulders formation, so then the prevalent interpretation becomes that this was a big corrective move to a prolonged uptrend. I think that there's going to be quite a big upside coming up. So why jump the gun and not wait for confirmation before you take a position here? Same deal with the FTSE. So far, this looks like a triangle to me. I mean, so far it is a triangle. Of course, it can, with corrective price action, you can never be that sure, because something might start as a triangle, it might end up being a channel, it might end up being like, some kind of a flag, or it might end up being something completely different. But so far it looks like a triangle. And, if this is the case, then also for the FTSE, I would be expecting a continuation lower. And as Blake said, and I've mentioned that multiple times, I really have no idea what's going to happen with Brexit. But if I was completely unaware of any political developments and I just had to trade this chart, what I would clearly be seeing here is, a consolidation after a rather impulsive move lower, which followed a corrective move higher after another very impulsive move lower, which means that any way you slice it, I don't know what's going to happen with the vote, which of course, still the vast majority of the chances are that it's not going to pass the UK Parliament. But one way or another, from a technical perspective, I would expect to see some continuation lower from here for at least one last thrust the 78.6 might be a good level to be looking as the next target, which is slightly below the 124.50 area. We're very close to support though, and as Blake said, on the other hand, would you actually buy the cable and hold on it? No. So in my opinion, if you want to do something, wait for a breakout, sell the breakout. If we get any kind of runaway break or whatever, and there's going to be some continuation following through. Now, if we want to have a look at some of the popular yen pairs, you can also see here that the pound yen is within a triangle. And if you look at the shorter term as well, this looks to me like a bearish consolidation, especially considering the last leg lower. So I would say that there is a quite high chance that this triangle is going to get resolved to the downside as well. Don't forget that we've already broken below a larger bearish formation. So of course, you need confirmation by breaking below the trend line support. But it looks to me like if we do make this move, and especially if we clear this previous low, which is roughly at 144, there is going to be follow through here as well. If we have a look at the euro yen, let's go ahead and look at it. This is another triangle here. We're closer to resistance, but this is too early. I mean, it can prove to be something else than a triangle, but obviously euro yen, not the best pair to be looking to trade at the moment. Why? Because as you see, we've obviously spent a decent amount of time in quite choppy conditions. I mean, up to this point and the move lower, everything was, from a technical perspective, quite clean. But afterwards, we still can have multiple interpretations here. What I'm looking for in the short term is a breakout from this triangle. In one case, I would be looking, if we break higher, I would be looking for resistance here at the 131.75 level. In the other case, I would be looking for support roughly at 125.50. Obviously, though, there are much cleaner setups to trade out there, but it's a pair we hadn't visited for some time now. So I don't want us to completely overlook like popular currency pairs like this one. Now, let's have a look at the metals. Nothing much has changed here. The one that is showing the most weakness, which isn't a surprise because it's a theme that has been going on for a long time, is platinum. If you remember, I had clearly stated, and that's what we had drawn there, that the price action in the platinum, the move higher had clearly corrective characteristics, and it isn't accidental that we found resistance at this previous low here, which acted as support once again there, which acted as resistance here, and the 200 daily moving average, we almost touched it before actually turning lower, and it seems to me like it's accelerating lower now. We're currently testing previous support resistance area, but to be very honest, I think that platinum looks horrible any way you look at it. So I do think that it's going to remain being one of the weakest metals. So if you really look into selling the metals, I think that platinum is the way to go. Now, if you're just looking to trade, or if your broker just offers you the ability to trade just gold and silver, silver is still underperforming gold, still within a descending triangle. Gold, on the other hand, we had talked about the possibility that it's going to jump higher, and it can still happen. It can still push higher once again for us to get a double zigzag here and test the confluence of resistances at 1260, 1265. But for me to actually, start considering even building like a short-term position for that, I would want to see this descending trend line first break to the upside, because so far what we're seeing is this trend line has acted multiple times as a barrier to price, and it did so yesterday as well, and so far today it has signaled the high. Obviously, there is a very good chance that gold is going to gap higher if we have something negative happening during the weekend, and you might never get the chance to buy it here. You might have to actually buy it higher if you're looking for this move. Gold silver ratio is still showing that we can first get higher before lower, but it's more than clear that momentum has been waning since September. So this is already a fatigued trend, and I would expect that at some point in the near future, trading this ratio to the downside is probably going to be a very good long-term trade. Copper, on the other hand, obviously copper is going to be seriously affected with whatever happens with any China agreement. But so far, what I'm seeing here is we had a double top. This double top played out perfectly to the downside. But this move lower, if we take the second peak of the double top to this low, this was clearly quite an impulsive move. So I'm interpreting this triangle as a consolidation after one move lower. So I would expect that this triangle has a big chance of getting resolved to the downside for at least one more thrust lower before looking for a big recovery, if that can even be the case, because if we zoom out, you can even see this whole move to the upside being like as a bigger corrective move higher. So perhaps some things, perhaps we might end up even seeing a reversal of the trend. Anyhow, too early to talk about that. One thing is for sure, from a technical perspective in the short term, resumption to the downside, even for just one more leg lower, seems like a much more likely scenario to me than anything else. Now, it's
the copper chart actually resembles the silver quite similar patterns.
Yeah. Yes. Okay. In the short term, yes.
Yeah.
Now, having to do with the USD yen obviously trapped here. As I've said many times, if I had to do something with USD yen, which I really don't want to do anything with it, because it's quite perplexed. It's messed up. It's more correlated with yields recently, but still sometimes you see not even following. It's not following risk in the vast majority of the cases nowadays, as it used to do in the past. Some days it's not even following the yield, so it's like a little bit stuck here. This can easily be a triangle, so I wouldn't be surprised if I saw one more push higher before lower. But on the other hand, if I do see this ascending trend line break to the downside, I do think that there's going to be continuation, and
Where would that happen? Ballpark breakdown of the trend line, price-wise.
Sorry, what was the question? When you said
where price-wise would that channel be violated?
I think that of course, the more the days pass. I mean, for example, if for some reason we keep consolidating, like let's say for the duration of next week as well, which I don't consider very likely, because I do think that we're going to have volatility in both on risk assets and FX and everything else next week. But it might even need just a break below 113. In any case, if we do take out this low at 112.50, I think we can be more than certain that this trend line has been broken. In which case, I would be looking for a move down to 110. 111.50 can hold, can provide some support, but I doubt that the move, if we actually break below this trend line, that a move just down to 111.50 is going to prove to be enough. So although I do think 111.50 can stall price action, for a period of time, for a day, a couple of days, or whatever, I do think that if we have already broken this trend line, we're actually going to end up pushing even lower than that, towards 110 at least. So let's have a look at what's happening with bond. By the way, I see that cryptos had a good day after a long time, but today they seem to be rolling over again. We can have a fast look at them. So U.S. Treasuries threatening here the 200. Yesterday actually closed right at the confluence of the 61.8 of the last move lower and this ascending channel. So far today, an inside day, currently testing the 200 daily moving average, but it's too early in the day, so let's see how we close. But as I said, I think it's more interesting in this case of having a look at the yields, because the yields yesterday did pull back. So although it was looking like we're going to trigger a double top formation yesterday in the yields, at the beginning of the day, yields did catch a bid later on. So we actually held this area. Perhaps this is going to happen today once again, but keep in mind here, I think a daily close below the critical, which is also like a psychological level of 3%, is going to trigger this double top formation, which points down to 2.8 roughly, which coincides with this large inverted head and shoulders broken neckline. So, you know, one case would be a retest of this, but if we also violate that, then we can start talking about something bigger brewing markets. Now, having to do with the bunds, the equivalent German or Eurozone in essence benchmark bonds, we are seeing this move to the upside. As we've said, this is a very, very long-term consolidation pattern. But looking at the prior trends, I'm pretty confident that the resolution is going to come at some point to the upside. But that doesn't mean that you should be selling any attempt to break higher, because if you did that the previous time, for example, we were testing resistance, you would have found yourself in the completely wrong side of the market at the worst possible price. So obviously, the closer we get to this confluence of resistances, which currently you can currently find roughly at 162.50, there is no risk reward to attempt being long anymore. But on the other hand, when we get close to that, you have nothing to lose to actually attempt being short, because there are two cases there. One, we get rejected once again, and we stay in this range, this descending range for a while longer, in which case you have a very good risk-reward ratio. Second case scenario, we break out of this formation, in which case quite fast if you were in the wrong side of the market, and you can not only just take your loss, which is going to be rather small since your risk is going to be very close to your entry point, but in my opinion, even reversing position then and switching from short to long is going to pay off, because when the market is coiling for such a long period of time, you expect that a thrust higher from this range should produce some more than decent follow through. So I think it's rather clear how somebody can approach this kind of a trading opportunity here. So let me open the question box and see. Oh, by the way, let's have a fast look at the cryptos. So as you see, just a single day bounce. So far, the market's giving it all back here in Bitcoin. Same deal with Ethereum. I remember very clearly, which is really funny, that when we were testing this 250 level, I wrote that if we actually make it below 250, the next real area of support is at 75, which 75 at that point was like 1/3 of the price. So in essence, you're thinking like, okay, yeah, but that means that it's going to go a lot lower in percentage terms than that. But that's what I was actually seeing, and now it looks very likely that we're actually headed to this 75 level, which is the 161.8% extension of this last rebound that we had there. Everything that we've seen since then is very, very bearish price action, because in essence, after this rebound, we haven't even managed to see a real rebound. Everything that has followed since, every corrective price action, is just horizontal consolidation, which shows how weak the market is. So really, I have no idea why somebody would want to be. I had no idea initially to begin with fundamentally why somebody would want to be long something that has no intrinsic value and no proven value. I am a believer of the technology, but I'm really not a believer of cryptocurrencies or the vast majority of them surviving. The technology might survive, even get broadly accepted and used. Even governments might use it in the future for money, but they're not going to use the existing cryptocurrencies to do that. They're going to make their own. So I really have no idea why somebody would want to get involved. But even from a technical perspective, I mean, the charts just look, they're a disaster. So let me go through the questions and see. What about your pattern in play, the USD Swiss? Nothing has changed with the pattern in play here, the USD Swiss. I'm really not sure. I was hoping that this is a bear flag, and it can still be. It can end up being a triangle, but one thing is for sure, the move lower that we had from this ascending wedge looks quite impulsive to me. So I think that it should end up being just the first leg of a corrective move lower. So one way or another, I'm expecting the USD Swiss to produce at least one more leg to the downside towards the 98.50 support area. So my outlook hasn't changed. Perhaps this is not a flag. Perhaps, and that's why I've said many times that with price action, with corrective price action, the problem is that you can never be sure in advance how it's going to evolve. So initially this was looking like a flag. Now it looks like more like it can end up being a triangle. It can even end up being like a little bit of a larger flag, right? So anyhow, one way or another, I'm still a believer that this is some kind of a B in an ABC. So I would still, I haven't changed my mind. I'm still looking for 98.50 at least to be tested. So, I have no reason to change my view on that. And anyhow, that's why, as I said, more than 50% of what we do as traders is manage our risk. So, if I'm wrong, I'm wrong. I have a very tight stop, and I'm going to move to the next trade because, what we're here to do here, what we are supposed to do here in the markets is not be right all the time, because that's completely impossible. Is that either being right a few more times than being wrong, or even be wrong, several more times than you're right, if the reward to risk ratio, the risk reward ratio you're chasing for is a very high risk reward ratio. I know traders that only go after like 5-to-1 risk reward ratios, and they're like wrong 2 out of 3 times, but they still make money, right? So of course it depends on your trading style, but as long as the relationship between your average risk reward and how often you're right or wrong is healthy, you can be successful in trading the markets. So that's what you should focus on. And that's why, by the way, speaking of which, it gives me a good opportunity. In 2 minutes, the interview is starting. So it gives me a good opportunity to say that since we considered risk reward ratio being very important, we introduced a new tool yesterday, which is the risk management calculator. We're going to enhance it even further today. So what you can do here is you can put like some data for any trade. So I'm putting like some random data here, and immediately what you're going to see is, and then you can choose to either use a position size or capital at risk, in which case it's going to give you the suggested position size, and you're going to immediately get the system estimating for you the statistics for your pattern in play or whatever you want to trade yourself, right? So this is going to be the first of the tools that we're looking into releasing in the near future. And one of the tools that we're going to be releasing, which is going to be a whole application in itself, is actually a trader's journal, because we consider very important for you to get used to the idea of using a trader's journal, because that's going to make it much easier for you to go back and see when you were successful, what exactly were you doing, when you were unsuccessful, what exactly were you doing, so you can keep repeating more, the trading approach and behaviors that actually led you in profitable trades, and avoid more of the kind of trading that produce more losses for you, right? So it's important to look back and be able to assess and also, in essence, test yourself, and this way find your core competencies as a trader and see what you're actually better in doing so, what you're worse in doing so, and do more of the kind of trades that produce good results for you. So thank you very much, Blake. I know that it's time for you to start your interview. I'm really looking forward to staying tuned. I'm sure that a lot of people are going to enjoy it.
Thanks, Steve, and I'll take over here. And hey, thanks for the overview of the ForexAnalytix, the new risk management calculator. That's actually a really great features for every trader. Just kind of knowing exact. Most retail platforms, trading platforms have some sort of risk management calculator attached to it. It doesn't, but there are a lot of them that don't, and so at least you have it with ForexAnalytix. So that's that is great. Now I want to thank you all for being here, and Steve, thank you for the analysis of the markets, and Dale, thank you for always being with us and providing the great interviews. Although I am going to take the helm today because I have a special guest, Ronnie Schlapfer, which is something I've been looking forward to.
Blake.
Yeah, thank you very much, Dale, and thank you, Stelios, as well, for being here. And I know our entire team is listening in right now, and so thank you all. Now, before I get started, and I'm going to bring over Ronnie. I saw him in the attendees. I just got to find him again because it's a long list, and just got to get over to his name. I want to tell you a little bit about Ronnie in my experience, and this gentleman, and for those of you that weren't listening in a little bit earlier, he's a guy that I've had the pleasure of meeting and becoming friends with, and really looking at him as a mentor over the last several years, and being able to trade with him.
To interrupt, Blake, I already did that for you. I found him and promoted him to panelist. Okay,
thank you. And I want to just say what a great and how excited I am to have Ronnie here with us today. And he's been an incredible influence in my trading, especially over the last few years that I've known him. And I know he flies very much under the radar from a social media standpoint. So many of you wouldn't know who he is from Twitter or anything else, but most of you know him from the $1 Billion Day documentary. And when I was talking about him a little bit earlier when I did my analysis, on the euro and all the other pairs earlier today, Stelios chimed in and he said, when I first started at Barclays, and this is 20 years ago, or however many years ago it was for Stelios, like 16, 20 years ago, he said, read the Market Wizards book, the Jack Schwager book, watch the BBC documentary, The $1 Billion Day, and go watch the documentary of Nick Leeson. Come back and see me tomorrow. That was it. And there are every person that's been in the FX market for any length of time knows that the $1 Billion Day is really it's a staple for all of us to have watched, and many of you, and I would say even most of you, have watched. So without further ado, I want to bring on my friend. I look at him as a mentor, Ronnie Schlapfer. Good morning, Ronnie.
Good morning. Can you hear me?
Perfectly fine, and so glad to have you here today.
Thank you.
You know,
This was not easy, but you tried very hard to get me here. I normally wouldn't do that, but now while I was listening to you guys and thinking about, my career over the last 43 years, I was just like realizing how everything changed and different, and all the people I met through all the years, and if if you want to know how I started and and got here where I am right now, at the golden age of 68, I can do that. Or we can talk about markets or about trading, or you tell me what you want me to do.
Well, first and foremost, we'd love to hear how you got started in this business. But I want to say that having you here is such an honor, and really. And for the people that were listening in a little bit earlier this morning, I told them how we met, and we don't have to go through that story, but it's actually a quite funny story.
Yeah. You were hard to get. You were very hard to get.
I was playing a little hard to get, but that was because I was just being more of a dumbass than anything. But anyway, I want to say that the knowledge that you have about the markets is unparalleled, and the experience that you have by far exceeds 99.9% of the people that are really trading the market. So I think what most people would love to hear is really how you got started, and from the beginning, how you got started and how you got to where you're at, because I know the story, obviously, as being you friends with you, but it's an amazing story to hear. So could you enlighten us and let us know how you kind of got here?
Yeah, absolutely. I grew up in the Swiss mountains. It's a city quite famous. It's called Davos. You have the World Forum there every day. So I grew up there. Obviously, 7 months a year we have snow, or at that time we had snow 7 months a year. And, all you could do up there really was skiing or playing hockey. And I decided to concentrate on the ice hockey. And I became a professional ice hockey player in like 1968. And my parents, they want me to have some education before, so I made a bank apprenticeship at the Cantonal Bank in Davos. That was when I was between 15 and 18 years old. And when that was done, I started my professional hockey career. And I played in about 4 teams in Switzerland: Bern, Zug, Zurich, and Lausanne, where I learned the French speaking for 2 years. And so I did that. And then when I was playing in Zurich, one of the big sponsors was Citibank, and the president of Citibank, and he was also in charge of trading, foreign exchange trading in Citibank. And Citibank at that time was pretty much the biggest bank in trading in the world, Citibank in Zurich. And so he said to me, listen, it's nice and good for you to play in the afternoon and hang around in the evening. You should do something in the morning. I want you to come to work for Citibank in the morning in the foreign exchange trading. And so eventually in 1974, I started trading in the mornings with Citibank, and then in the afternoon I went and trained, very hard training for the hockey. And then, after a year, 1.5 years, they didn't have enough people because Citibank was getting bigger and bigger in trading. And then they had me stay there until 2 o'clock in the afternoon, 3 o'clock in the afternoon. I missed trainings, and then it became a problem. And then he said one day to me and said, listen, you have to quit hockey and you have to work full time for Citibank, and you have talents, and blah, blah, blah. So I quit hockey, and then I became, a full-time employee of Citibank. And, you know, at that time it was very trading was like kind of crazy. There were no charts, there was nothing, there were just flows and speaker boxes from the brokers, and you had to have, like, you know, it's buying Swiss franc, selling Swiss franc, and you know, play a lot in the yen also. But it was just pure trading flows. The bigger you were, the better you were able to move the markets. And so I did that, and you know, first I was like, for a year I was at Telex. We had about 10 Telex machines, got the prices from all over the world through Telex. And then eventually I graduated to be able to sit on the main desk and do the phones and the brokers, and was very, very profitable, that trading at that time. And the person in charge who hired me, he was like probably the most famous guy in trading at that time. And so one day he said to me, you know what, I took you out of hockey and you have so much talent. They look for a chief trader in Citibank Tokyo. So a month later, I was on the plane to Tokyo, and walked in the bank there in Citibank, and you know, my English was not you know, that perfect, and of course Japanese nothing. And it was like in 1978 I was in Tokyo and managing the trading room of Citibank Tokyo, which was much smaller than the one in Zurich. But over 1.5 years, you know, I got big help from the Zurich office, and somehow I was able to make a big profit for Citibank in Tokyo. And then, of course, New York got wind of that and said, oh, this is guy in Tokyo from the Zurich office. You know, why is he in Tokyo? He should be in New York. And I got a phone call after 1.5 years on a Friday, and they told me they want me to be in New York on Monday. And I had an apartment and had a wife then. Wow. And so I went 3 days later. I flew to New York, and I was like number 2 there in the trading room, and we built it up. And I also built a gold trading desk at Citibank New York. And I stayed there for about, I would say, 79 to 83. I stayed there and traded, and Citibank New York became much bigger over time and got more sophisticated. And then the chief trader of Swiss Bank Corporation at that time we became good friends, and we decided that we should leave the bank and start like a trading company. And so we started probably the first hedge fund in the world, 1983. I started it. He came a year later, and I remember we were sitting in the office. In the beginning, we had not one client, but then we knew for some people in Europe they wanted to give us some money, and eventually what we got was a $10 million loss limit, which was huge at that time, and the size of trading was up to us. We just were able to risk 10 million. It was managed by UBS. The loss limit was managed by them, and wow. So we traded that money and did extremely well. The swings at that time were just crazy. 5-6 big figures in the dollar, you know, the Deutschmark, the Swiss franc, every day up and down. So you were able to lose a lot of money or make a lot of money. And in the end, for us, you know, we did well. I remember in the first year, we made about $30 million profit in 84, and I know in the middle of the year, unfortunately, we were not too smart, and then we gave back another $12 million. In the end, we made some money, but not that much. The second year was about the same, a little bit bigger. We made, so these clients were very happy with us. And then that was about, then another partner joined us, my dear friend, Brad Westerfield.
And that's the gentleman that was in the $1 billion day with you.
Yes, he was in the $1 billion day with me, or with us. And we are very, very close friends. And then we traded very successfully until 1994. And then for me, that was 20 years of trading. And at that time, because you had so many moves overnight, basically it was like a 20-hour business a day. And we got so tired of trading in 1994. So we had about $150 million under management at that time. So we decided to close the fund and just take a break and see what we want to do. And just was too tired of trading mentally and physically, and just needed a break. So we closed our fund. And then I had a friend who, and I said to myself, I should try something else than trading. I had enough. I did well. I had a very good living. I made good money. I should do something else. And so with a friend of mine, we started a shoe business. We did Gore-Tex boots. First year we sold $6 million worth of boots, and second year we sold 11 million. But then it was very difficult to get the money from the clients, or we had cancellation, and the whole thing became a hassle. And I said, this is not for me either. And I went back to trading, and just my own money, and had a couple of friends that gave me money. And so I was like basically sitting in my pool house and trading $20 million, something like that, with a couple of friends. And I met, and I was very happy with my life, and I thought that I'm never going to go back into big time trading, and I'm happy to manage my own money and some of my friends, and was really happy. And then I met my friend and partner, Philip Gallos. He was trading at that time at AIG. He was like a big currency trader there, and we became good friends. And he started to manage some. I gave them some of my friends' money because I really didn't want to do that anymore. And then after a year or so, he basically wanted to start a fund, and he asked me. I said, listen, can you not come out of retirement and we can do it together? You did it already once, and so we were very interested both in the trading, and so I said to him, okay, let's start. I do it for 6 months, maybe a year, and then you're on your own. And so we started TradeX currency fund. Started with about $50 million, and then I was more like on the fundraising side, because we wanted to build up big assets. And we ended up, after many years, not many years, like maybe after 5 years, we ended up managing $2.5 billion. And so we had a pretty big operation. Omar Sadiq joined us. And so we had a concept, and that's very interesting, because we got bigger and bigger, we thought we need some other currency traders to help manage us the assets, because it was too big basically for us alone, and especially Philip, to manage all these assets. So we started to allocate like 30% of our assets to other currency managers. Now, unfortunately, pretty much nobody made any money, or they gave it all back. And so we were just talking about it, that maybe we have hired 30 to 50 traders, and really nobody made any significant money. Most people lost, or most people were flat. You know what I mean? And so
so you were like a fund of funds at that point.
Yeah, we were a fund of fund, but we only allocated out very small parts, like 25-30%, and the rest of it was managed by us, or mainly by Philip Gallos. And I get back to Philip Gallos about him a little bit later. But we were very discouraged that nobody made money. And funnily enough, today, from all those traders and people we gave money, we believe that nobody's in business anymore. So all
Wow.
these currency funds, all these people managing currencies, they disappeared, and so we were ending up basically we had to let them go, and we had like $2.5 billion to trade, and we did that until 2011, and we never had a losing year, which is unheard. We started in '99, and we closed the fund in 2011 without ever having a losing year. And you know, I have to thank Philip Gallos, because he was trading excellent for us, and every year turned out the performance. And but it was just too much money, and we decided to close the fund in 2011, and we started a private partnership between Philip Gallos and Omar Sadiq and myself, and we are managing that partnership, and we have a few traders, and luckily one of them is Blake Morrow. Very tough to get, but he's with us now, and so that's what we are doing. I'm still trading every day. If I'm around, I take more time off, and I'm actually, like, when I look back at my career, I'm very surprised that I still able to make money. I base that on my experience and being very flexible. I think right now, since maybe the last 18 months, 24 months, it's the hardest ever to make money. Very few people make money. There are very few traders left who can make the big money on a discretionary basis, because the algos are on every bid or offer, and volatility is not what it used to be. It's always a little bit depressed, and when you look at the moves we have on a yearly basis on a euro or so, it's like really nothing, and it's so difficult to make the money, and one has to be very smart to you know, how to look at the market, and I have some maybe down the road later on today, I can explain what I think is very, very important to be successful, and what people should not do, because if you do it the wrong way, it's impossible to make the money.
And that, you know, and that's exactly what I think everybody listening in wants to hear. You know, how people have what you've seen and what you have experienced, that you can think that, you know, how people can be successful. But before you get to that, I want to talk a little bit about Philip Gallos, and who is also known as FX Macro. If for those of you that don't that don't follow him, he is and fortunately I've had the great pleasure of trading for Ronnie's firms now for the last 2 years. It was a different firm, and I went over to Gallos last year, or this. It's actually been about a year, almost to the day. And I've had the pleasure of meeting Philip, obviously in person, and trading with him. And he is, I would say, in my experience, the most awesome trader. But what do you think, Ronnie? What characteristic do you think sets him apart from any other trader you've seen? And I know you'd probably say that he's one of the best, if not the best trader you've ever met in your life. But what sets him apart? What makes him different from everybody else out there?
It makes him different. Like I said, I explained, since 1999 we trade together. And basically, you know, every day, you know, we you know, talk about the trading. We see what we are doing, and I can only mention one word which makes him better than anybody, and that's discipline. I have never met a human being with that much discipline. He made, in 20 years, I never saw him make a mistake in trading. I'm not talking about being wrong on the market or taking the profit too early. Of course, those things he did too, and he does, and everybody does. It's it's no other way. But in his entire trading career, he never had a loss which, like, let it go, or he let the ego get in his way and was sitting on a bad position, or had some wishful thinking. I never saw wishful thinking with him. I never saw ego. I just, whatever stop loss he had, he never changed it, and he had the best money management from anybody, and that's why he is probably the most successful currency trader ever. The way he approaches the market. And the other thing, what I have to say, and that's my personal opinion too, the trick is not to trade. To sit there and be able for 3 days to sit in front of the machine and never do a trade. He can do that every week. He can do it whenever he likes. He's there concentrated. He watches. He leaves the office. He does his fitness. But he can.
And he's in great shape.
He can sit there for 1 week and never do one trade.
And I've sat there and I've watched him, and he we're all wrong, Ronnie, and we all make mistakes, and we all make bad calls in the market. It's part of our business. But he does, when he's wrong, he'll bite it. He'll take a small loss and he'll move along like it never happened, and he moves on to the next trade. And it's really fascinating and awesome to watch at the same time. And how many of us, and I'm speaking for the majority of the listeners here, how many of us have gotten in a position and say, oh my God, this trade is just not working for me, but I think with this happening, it's gonna come back. And we've all been there. I mean, we've all been there, but to watch somebody do it on a really next level, more so than many of you could even imagine, and I'm saying that because I know the numbers, it's really quite staggering to watch and very amazing to watch.
When I look back, right, from when I started in 1974 until about 1988, something like that, there was no really charting. There was nothing, it was more like flow trading, and it was just like, always a little bit like the Wild West. You had up and down every day, up and down. So when you were wrong in the morning, you had time in the afternoon to make the money back. And today, when you're wrong, you're wrong. It's different. But at that time, it was interesting. And then later on, the CTAs like the John Henrys and all those guys, a lot of CTAs, started to trade, and they in the beginning, I remember moving averages was the big thing. Everybody programmed these moving averages, and that's how John Henry started. And then over time they became more and more sophisticated, and that basically went on for 2 years. And then of course you got charts, and then that happened until about 2010, 2012, and then the algos started, and one algo, two algos, and I remember jump trading from Chicago, those guys, and more and more of those guys started in the last few years. Since 2 years, 3 years, we have artificial intelligence, a combination of that plus the algos. That's why we are now in such a difficult situation as discretionary traders, with this depressed volatility to make money. It's very difficult. And that's why I can only stress, if I would say two things, discipline is the number one. And for me, don't trade, That means, be able, most people cannot sit in front of the computer and just watch it, and they all, after 3 hours they think, oh, I see something, and they jump in and it's just because they wanted to put the trade. There was really no trading plan, there was no stop loss planned, and you know, and that's how they lose money. Yeah. And don't make it. And you really have to wait for your you know, for a setup. You have to have the money management in place before you do a trade. You have to look about how much you want to risk, where is the stop loss, can you afford it, how sure are you, and then you can put the trade in. And the minute you put the trade in, you put the stop loss in. You know already what you lose, and you're going to comfortable with it. And it says it's 3% or 5% from your capital or 1%. It doesn't matter, but you have to stick to that. And there is no ego, and you just have to follow the rules, and you can never ever step away from those rules. You have to stick with it, and you know, and when you have a strategy of buying dips and selling rallies, more or less, and trading the news combined with charts, you will make money. But you can never make one mistake, because the one mistake could cost you the whole month. And that's what, for me, is the most important to be a successful trader.
And you know, I feel very fortunate, because Ronnie and I, we dissect my trading all the time between him and I I have the luxury of spending the time with you to go through all, you know, because I make mistakes just like any other trader out there, and we talk through it all. But one of the things that I've let me take a step back and point out the fact that Ronnie, you are a really awesome trader. I know you give a lot of credit to Philip Gelos, but man, I've watched you over the years, and you are awesome at what you do. And don't let, and for those of you listening in, don't let him fool you like he doesn't know what he's talking about. No, he knows exactly what he's talking about, and he's really, really good. But one of the things that I've noticed about your trading, and one of the things that I think make you so awesome, is you are Dale, coach, Dale Pinkert, who does our webinars and all of our interviews normally, he always calls it intelligence gathering. You brush shoulders with some of the greatest minds in the markets, and you're constantly on the phone, in touch, emailing, talking to your network of traders, feeling everybody out and understanding where the market is and the sentiment of the market. So how important is that to you as a trader? Because I've seen you in action, and I see you, networking, and I get a lot of the research that you find, and how much does that play into what you're doing personally on a daily basis?
It's very important, and for me, like, you can look at charts, you see the pictures, you see trend line, you see head and shoulders, you see godly patterns, you see whatever you want to want. In the end, it's meaningless, like just concentrate on that. You have to concentrate on the actual market, on the psychology of the market. For example, there's an event like 2 days, 3 days. We have an event now this weekend. We have another important event December 11. You have to know those events. Before those events, you have to figure out the psychology of the market. First of all, you have to know what the positions are. Are the markets more? Is the market more short? Is it more? Is it neutral? Or what's the opinion? What do the people think? And then my strength is to, for example, 2 days before an event, I try to figure out where are we going to be before the event. Do the people have to take the position back? Do they have to cover? Or are they very confident that it goes one way and they will take the position beforehand? And when you figure that out, then, you can buy the dollars or sell the dollars based on your feeling, based on positions. And actually, at 4 o'clock in the afternoon, the day before the event, you can take the profit because you analyzed it correctly, that what the market is going to do pre-event. And I think that people should do that more than anything else. Because after the event, you get different news, the market gaps, and you can't play anymore. you know, and it's too late. So I rather try to make the money before and then after. I think it's easier. So that's
that I know, and I'm sorry, I didn't mean to interrupt, Ronnie, but that's, you know, positioning, and I've watched it with you, is so important. And you just made a key point about, you know, waiting for those events, trading around the events. And it's something that, you know, we try to talk about here every day that we do our free webinars, is how, you know, how are people positioned going into this, you know, whether it's the jobs report or the G20 or you know, or into Brexit, and, you know, we know the market's extremely short. So what happens if they pass the vote in Parliament? Those are the types of things that you, as a trader, you have to be completely cognizant of. And, you know, one of the things, and I have to say this because I laughed at it, because I watched your $1 billion day video 2 days ago, and I think I told you this yesterday, but I watched your video from 2 days ago, and it's funny because knowing you for all these years, your mannerisms are still the same. You talk the same. You talk about the same things. So there are a lot of things that don't change. And one of the things that you said actually in the $1 billion day is, you know, I was sitting here waiting for the cable. I think you were talking about the pound. I've been waiting for 3 days for it to get to this price, or maybe it was your assistant that said that, or maybe it was your partner Brad. But that's so very important in these markets, is, you know, understanding the positioning, understanding where you want to be, and where the best risk reward placement is in the market at that very moment in time. Would you agree?
I absolutely agree. For me, for example, like, you know, like I like to look at charts, like in our office, besides you, Blake, I'm probably the guy who looks most at the chart, because I'm used to look at the chart. I understand the charts. Yeah. And of course, when I listen to ForexAnalytix, they have like other tools in charts, which I didn't know before. Now I learned that too. But, you know, the chart for me, you look at the chart and, you know, it's very different. You look at a 5-minute chart, you look at a 15-minute chart, 60-minute to 40-minute. Now, something very important, and I saw traders making that mistake all the time. So let's say I'm a trader, I like divergences, right? Positive divergences, negative divergences. But this is a very bit different picture. You know, you look at the 15-minute chart, look at the 60-minute, 30-minute, 240, and all of a sudden, you know, like let's say you're a 15-minute chart trader, and then the divergent picture didn't work for you. Then you go to the 30-minute, and then you say, okay, I still can hang in there. I'm still okay. It's negative divergence, but that doesn't work. And then you look at the 240-minute, and the divergence is still there. But in the meantime, the dollar moved 1%. You know, and the divergence never came in play. And that's how people lose money. You have to always know, are you a short-term trader? Are you a 1-day, 2-day trader? And then, you know, which chart do you use? And when you make your assessment and your trade based on a 15 or 30-minute chart, you have to stick to that chart. If that picture doesn't work, you're out of the trade. You can't just always say, okay, you know, I have a chance. I'm looking at the 60 minutes. I'm still in the game. And then I go to the 240, all of a sudden you have a big loss. And the play never happened. It happens maybe 4 days later. And I think a lot of people make that mistake. And I think a lot of people make mistakes by buying breakouts, you know, which usually don't work anymore because the algos go immediately the other way. So I always feel that, you know, when you trade and you really want to be careful, sometimes for me, it's better to log into a position or leg into a position in two parts. You do here a little bit and you do there a little bit lower if you want to buy, and you know where the stop loss is. And if you are right immediately, you buy and it goes up, you don't add. You just wait to your target, take the profit, so you made money on half instead of a full position. But that's the way to do it. I think I really like you know, two amounts, like to trade. Like you buy here a little bit and then lower, you buy a little bit. You figure out, maybe you work with some Fibonacci numbers, and I know where the stop loss is, and that's it. And so you know. But
and if you're wrong, you're wrong.
Huh?
And when you're wrong, you're wrong.
When you're wrong, you're wrong.
Right.
But it gives you a better chance. It gives you a better chance. You know, sometimes, you know, when you look at the level now, you want to buy here at 113.48 in the euro. You know, maybe the euro could trade down to 113.10. You know, so why not buy here half? And when it goes to 2025, you buy another half. You put the stop at 112.95. And you hope for the best for the G20 meeting. I suggest that you don't do that, because right now, for me, that meeting is 50-50, and I would not take any position right now if I didn't have it from before. You know, I mean, like after the Powell talk.
Yeah.
If you vote it then immediately, then and you are bullish and risk on, you should keep the position. But right now, if you don't have a position, I would not speculate for the G20 meeting right now at these levels.
Yeah, it's a coin toss. It is. And you know, Ronnie, we were talking about something else privately ahead of this interview, and one of the things that we talked about is, you know, these algorithms that are in the market, which is obviously a very big. They know exactly where. They know exactly where that fib level is. They know exactly where the trend line is. They trade around them. They try to, you know, get you in, get you out, you know, through those numbers. But when you have a good macro theme and a good reason to be long or short dollars or euros or whatever the currency is, does all of the technicals get thrown out of the window at that point? What do you believe?
Yes, I think we spoke about that, Blake, because I think those are the situation where you know, you always have to look at the fundamentals, and sometimes maybe even at the times we have right now, I think the fundamentals are more important than the charts. And the charts are always helping you to know where you were and where you are right now. And then the fundamentals, you know, if they're strong enough, if an event or news happen, you know for sure it's going to go. And then you can't wait, you know, for a trend line to be broken. You have to go in and go with that. And when you did the right analysis, those are the times where you have to take a little bit of bigger position, because that's the time to press. And when you make those moves, like the one with Powell, if you are quick with Powell, that's the best example I can give you. I had no position, but before Powell's talk. But then when I heard what he was saying, I bought immediately Australia dollar, I bought the euro, and because I thought that was very important, like super important, and I bought like triple than what I normally do, and that made my entire months, because the months, all the days before, I thought were very difficult. I didn't do much because I like to sit there and do nothing, and because I never saw anything, and that's basically this Powell trade was my profit for this month.
Yeah.
But I had, I had the guts to go big, and it made sense, and nothing to do with charts. And now here we are in the middle here, from the top, you know, from where we were, you know, we're right in the middle. There is nothing to do here. There is nothing. Everything you do right here is 50-50 trade. That means you shouldn't do it.
Those are some very wise words for the trading community, Ronnie. I know we've been going on for about 45 minutes, and I'm going to hold questions for today as much as I'm sure people would love to just, you know, barrage you with questions. But what I really want to say to you, Ronnie, is you've been an absolute inspiration to me, and I'm so happy that people and traders around the globe are going to, you know, they're listening to this interview. They're going to listen to your interview for years to come as we put up the recording. It's an amazing amount of knowledge and experience that you have been able to bestow onto the trading community. Are there any is there any like last comments that you'd want to make that maybe you were like, oh, I really wanted to talk about that, or anything else that you'd want to discuss? Because just having you here and being able to talk about the things that you hear from other people, but hearing it from somebody like you really resonates, I think, with most.
No, the most important thing, and if I can be helpful to all the traders listening and and trading and struggling, and because everybody struggles, because these markets are extremely difficult, and I just want to stress that what I said before, the number one point for me in trading is discipline, and you have to have a plan. And the plan is not thinking about the profit. The plan is how much can I risk and where is my stop, and be very smart about it. And where do I need to take the profit, which is the nice thing, to take the profit, but I'm much more worried on every time I trade. I'm really worried about the loss, and should I do this trade? Should I not do it? Did I do the correct homework? Fundamentally, does it make sense, that trade? And how big should I do it? Is it like, I'm 100% convinced, I'm 50% convinced, or should I not do it? I think everybody has to be so disciplined and think about those points, and really look at the dollars you're risking, and then say, yes, I'm ready to do it. I like it. I have all my reasons, and I do it. And then you have a chance of making money. If you don't follow those rules, over time, you will not make money. And that's basically what the big message I can give to anybody who trades.
Well, thank you so much, Ronnie. And I like I said, I can't express my thanks enough for having you here today and being able to share your knowledge and your experience with everybody in this community. And you, as I know you don't know it because you're not you don't have a social media presence, but you as a person have made a huge impact on traders around the globe, as so many traders have watched your documentary and for years. And I have to leave you with one last question. So whose idea was it to do the shower scene in the BBC documentary? Was that your call?
You laugh about it. They had a woman producer, and it was her idea.
Oh, I wonder why.
It was her idea.
You're still as slick as you were back then, Ronnie. You are now. I love the heck out of you.
My wife was not very happy about that. But it was all fun. It was all fun in the end, and it's a pleasure. And whoever listens, look at our our tweets on Twitter, like FX Macro. That's mostly Philip posting IDs and trade IDs, and I think it's very important to see what he does and says.
And he doesn't do it for anybody's benefit. He does it because he's sharing this knowledge. It's and he's got great ideas. Yeah. Really does.
And sometimes sometimes he comes out with an idea and he's a little bit early, and then the next day it really happens. That can happen to anybody, but overall the ideas I think are excellent, what he posts, and people should read it, like when he and during events, and ideas on all different markets. I think it's interesting.
Yeah, well, there's many things that have been pouring in from the listeners, and personally, I just want to thank you once again, Ronnie. You're an awesome individual, and I hope everybody is able to take that away. Not only your knowledge, but just the fact that you're such a great person. So, thank you so much for being with us today, Ronnie.
Thank you. Bye, everybody. Have a nice weekend. Okay.
All right. Good luck. Thanks, Ronnie.
Bye.
And guys and gals, this is Blake Morrow with ForexAnalytix. I hope you enjoyed today's webinar, and remember, it's going to be recorded, so you guys can go back and listen to it whenever you want. And good luck this weekend. Hopefully, you stay safe over the G20 weekend, because we don't know what's going to happen. So, have a great weekend. I'll see you on Monday on the FACE webinar with Dale and Steve and Stelios and the rest of the team. Have a great one.